Ladies and gentlemen, good day and welcome to Rajratan Global Wires Limited Q2FY26 post-results earnings conference call. As a reminder, all the participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Shailesh Raja from B&K Securities. Over to you, sir.
Yeah, thanks, Shlok. Good evening, all, and thank you for joining us for Rajratan Global Wires Limited second quarter of FY26 earnings call. During this call, from the management side, we'll be hearing from Mr. Sunil Chodia, Chairman and Managing Director, Mr. Rajratan, ED of the company, Mr. Pranay Jain, CFO, Rajratan Thailand, and Mr. Hitesh Jain, CFO, Rajratan India. I would now like to turn the call to the chairman for the opening remarks, followed by Q&A. Sir, you may begin now.
Yeah, thank you, Shailesh. Thank you, B&K, for organizing this call. Thank you, all the participants, for your interest in joining the call today. I'm happy to share with you that we have posted good results. We have shown a revenue growth of 20% this quarter. There is a substantial volume growth in this quarter, both in Thailand and in our India business. And led by that growth, we have posted a EBITDA which is close to 40 crores in this quarter, and highest ever sales crossed 32,000 tons in one quarter. And all this is possible because of our Chennai plant getting more and more approval, and there is a good traction in global market also for Rajratan to export more in coming quarters. And I think we have left behind the worst quarter, which was last, and going forward, you should be able to see better performance of your company. With this, I'm open to answer your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Sanjay Shah from KSA Securities Private Limited. Please go ahead.
Yeah, thank you for the opportunity. Good evening, sir, and congrats on great set of numbers. Sir, continuing to your last sentence about export, can you highlight what was the export volume from Chennai in first half of 26, and what is the total target of 26 and 27? And what are the primary markets that we are targeting?
Yeah, so currently, our total export to markets other than India and Thailand is around 2,200, 2,300 tons per month, which is also divided into around 1,200 tons from Thailand location and 1,000 tons per month from India. And within India also, roughly, it is 50-50. So we are doing around 500 tons of export from our Chennai location and around 500. And all these decisions are based on the availability of containers, availability of the competitive, freight rates and all this. Yeah. And primarily the exports are happening in Southeast Asian market, which are Sri Lanka, Indonesia, Malaysia, Vietnam, and many more locations in Asia. We continue to export to Europe, which we had developed post-COVID, and we are also exporting quantities to North American market. Yeah, and there is a mix of export from both the locations, from Thailand and India. Yeah.
Right, sir. Then what we can do in next H2 and next year, sir? Export, what are the targets?
Yeah, so we have, as you know, we have a setup in America now. We have a setup in Europe. We are shortly engaging more people in Asian market. Okay, and our plans are to at least, reach a total export of around 40,000 tons in next financial year.
Oh, that's great, sir.
FY27. That is the plan we have made.
Right, sir. Right, sir. So my second question was regarding our realization, which has gone up in India as well as from Thailand by 6 to 7 kgs in India and 10 kg by rupees 10 per kg in Thailand. So are these sustainable, and what should be the sustainable number you feel which we can do, and what are the reason for this higher realization?
So I think I'm not confirming this numbers of higher realization, but yes, this gross margin is sustainable. Okay, there can be some pressure on gross margin if there is a change in the raw material price. Currently, the raw material prices are softer, so we are able to maintain this. Otherwise, there may be a lag of 1 quarter if there is a sudden change in the raw material price. But we are currently operating at a very competitive market. Okay, so these prices are after factoring in all the competition from other players in the business.
Right. In last quarter only you alluded about the higher imports from China and both in domestic as well as Thailand. So currently what is the status and how competitive we are?
In India there is not much of import from China. Only few customers are able to import. But in Thailand we are competing with Chinese import, and we are profitably competing with them and growing also. Yeah.
So in India, new capacity from Tata and other companies are coming up.
Yeah. So in India, as you know, Tata has also increased capacity. Our other competitor, RT Steel, has also increased capacity, and Bansal Wires, they have also put up capacity. But Rajratan being present in this business for a long time, because of our knowledge of this business, our product quality, and our strategic locations, Chennai and Indore, I can say we are ahead of our competition. Yeah.
That's good. So price parity is coming near to the competitor? We are getting better off?
No, price differentials are there, but depending on the customer. Earlier, we were not selling quantities to North Indian market, which is low price market where approvals are also not required. But with Chennai in operation, a lot of our customers will be fed from Chennai, and we'll have open capacity available in Indore plant, which will start, selling to customers in west and north of India.
Right. So my last question about non-auto business opportunity for bead wire in overseas and domestic market.
Yeah, so there are, not many opportunities like that. Mainly we are exporting bead wire only. Okay, for now. And in India we are doing some business which is non-tire business. So that is a constant business we are doing.
Okay. I'll come for few more questions in queue. Thank you very much, sir. Thank you for the
Yeah, thank you, Sanjay ji.
Thank you. The next question is from the line of Rishabh Gang from Sancheti Family Office. Please go ahead.
Hello, sir. Thank you for the opportunity. Good set of numbers. Wanted to understand, more on how are the export volumes shaping up, especially for the premium customers, right, in the US and Europe. and if you can provide a breakup of from where are we exporting to the US and Europe. A follow-up on that is, wanted to understand more on the size of opportunity at customer level in the US and Europe, right? So if you can explain for any one customer, names are not needed, in general, how much bid wire they will be consuming per annum in these geography, US and Europe, and how much are we supplying them currently, right? To understand what is the potential to grow to supply more premium bid wire to these geographies. Yes, sir.
Yeah, I am afraid we'll not be able to give you very specific information, but Yashovardhan will throw some light on this market and opportunity because he is responsible for global market. Yeah. Yashovardhan?
Yeah, hi. Yes. So, we've, in the last 2 quarters, we've transitioned into, supplying bulk quantity trial lots to many customers. So, we were in an approval phase earlier, which has now converted to bulk trial. Eventually, we are hoping that this volume should increase further this year. And the plan that we have for next year's export business is also dependent on these approvals, which has already happened. Just to give you a perspective, one Japanese MNC who we are approved with now in Europe probably buys about 3,000 tons to 4,000 tons a month. And there we have started supplying probably, 5% to 8% of their requirement. So the headroom at these counters is quite a lot.
This is very encouraging, sir. Also, wanted to understand any senior management hire or, hires that we have done for, especially for the exports, as well as for the Korean customers. So I remember that you mentioned that the volumes were not moving up in some quarters ago. So any actions that we have taken, to improve volumes to the Korean customers?
To be honest, the action that we've taken is we've shifted our focus to other customers. Korea seems to be slightly, over-competitive market, situated very close to China. The logistic cost from China is also very less. And probably we are seeing that those companies, the approval and scaling up is very slow. We are still in discussion with them. It's not that something has stopped, but the kind of trajectory which we were expecting, that has not happened. But contrary to that, we've got that growth trajectory from companies in Europe and America. So probably there are many counters that we are working at. Some would be slow, some would be fast, and some we would want to shift our focus from. So that's the plan that we have.
Mm-hmm. And I would like to add here that serving to Korean customers was, resulting into tougher competition with 2 Korean, multinational companies who supply bead wire to them. Okay, so that is, let me tell you, that is becoming very difficult. So, that is our learning also in last 2 years.
Absolutely, that makes sense. For the Indore plant, I think, have we witnessed any volume decline because, we are shifting to the more volumes to Chennai, as well as we wrote this point that liberated the Pithampur plant to seek alternative and more profitable markets. So when we say more profitable markets, what do we mean? Which markets are we supplying from Pithampur?
No, when I say more profitable, it doesn't mean only profit in terms of price. We were not able to supply to customers in this part of the country, North India and West, okay, because of non-availability of capacity. So there is no decline in the capacity in Indore. There is a shift in service, from which location we are serving. So we were serving big volumes to South Indian customers from Indore, which is now moving to Chennai location, and we'll have capacity available. So we are using that capacity for export and also to service to North Indian customers. Yeah. And in our business, more volumes means lower cost of production. So that is where we are confident of keeping our profitability intact in spite of competition and in spite of higher volume to lower cost customers. Yeah.
Absolutely, sir. The 91% Thailand utilization was very encouraging. On Chennai, I wanted to understand, let's say, like how much offtake per client has increased, right? Because of Chennai being very proximate to them, as well as, what is the status on the PLI for Chennai? Like, did we do 14,000 tons in FY25? Like, how is it PLI thing moving for Chennai?
Yeah, so volumes are shifting to Chennai-based customers. So I'll say currently we are supplying 50% of what we were supplying from Indore. So 50% of that quantity has moved to Chennai. So more and more of that will happen. On PLI, we couldn't do 14,000 tons as committed with the PLI agreement. We have done less than that, but we have applied for revision in the volumes, production volumes year on year. And we are, chasing with the department, we are representing to the government to allow us change in the year on year production targets. And I hope that will happen. But in all our projections, we are not including PLI as a gain up till now. That will happen only if we get approval of the change in year-on-year production targets. Yeah.
So any PLI incentive will be incremental to the margins. So when I asked you about the volumes, let's say we are supplying 100 units to company A, which is near Chennai, right? Earlier, before Chennai plant was there. So now Chennai plant has come. So how much additional volume have we able to get from customers which are near Chennai? That was my question. Like increasing wallet share. If you can illustrate with a number, maybe.
Difficult to say. We have grown our business with them if I compare from my last year, because our understanding with this bigger clients is on an annual basis. So our business with these companies have grown from anywhere from 10 to 20% in first 3, 4, 5 companies. Yeah.
Okay. Just the last question, then I will come back.
And then we have planned to offer them some value addition, like we are offering them to keep minimum inventory, and we will take the responsibility of supplying them just in time, which will be possible because we are surrounded with 10 tire manufacturing locations. So, but all this will take some time. Okay. Yeah.
Excellent decision on the location, sir. One question, I've been reading a competitor's investor presentation. They entered into the steel tire cord. So, and I read that somewhere it's 20% kind of margin. So I wanted to understand, like, do we also think about entering into other products which we can sell to tire companies? And as a percentage of the total tire cost, do you know, like, can you give us some idea on how much of the tire cord, steel tire cord constitutes?
Yeah, so I'll answer all the 3 questions. So our back of the envelope calculation doesn't show that it is a 20% margin business, one. Number 2, it is a very difficult business. Investments are very high and approval cycle is much longer than bead wire. So we will not dare to enter that business without a very, very strong partner, okay, who takes the responsibility of making the right product and getting the approvals quickly. Okay, so that is our plan. So right now, there is nothing such happening in Rajratan that I can tell you about tire cord. Number 2, tire cord is about 10 to 12% of the tire input, okay, against 3 to 4% of bead wire. So yes, consumption is high, and it is a bigger, raw material for tire industry.
Got it. So I have a few more questions. I will come back in the queue. Thank you so much for the opportunity.
Yeah, thank you.
Thank you. The next question is from the line of Arnav Sakuja from Ambit Capital. Please go ahead. Mr. Arnav.
Yeah. Hi. Thanks for taking my question. So, with regards to your other expenses, there was an increase by around 60% year-on-year. So just wanted to understand that a bit from you.
Yeah. So this other expenses are related to expenses in Chennai, because till last year we were able to, a lot of expenses were capitalized, but we have shown fully commercial plant operating now. So all those expenses have come to P&L. Number two, this also has a lot of freight outward cost for exports we are doing. So around 13 crore, 11 crore is the freight outward cost. Then there is a higher cost of power and fuel by around 9 crores and many more such costs. So there is nothing extraordinary about it. This other manufacturing cost will come down drastically as the volume in Chennai picks up. Yeah. So the cost is not proportionate to the volume right now, because Chennai is still operating at lower production.
And you were mentioning the PLI benefit earlier, that basically you apply for volume revision from this PLI perspective. So if the PLI benefit comes through, then, could you quantify what the benefit would be?
No, as per the agreement with the Ministry of Steel, we are supposed to get 8% of incremental sales every year. Yeah.
And so just my last question is, could you please give a bit of an outlook into the tire industry?
So I see tire industry doing very well. They are also growing, but their growth is 5 to 8%, not more than that. And I also see that tire industry is able to export also. So the projections they have given us is in that range of growth for next year also.
Okay, thank you for answering my questions.
Yeah.
Thank you. The next question is from the line of Bhargav from Ambit Asset Management. Please go ahead.
Yeah, good afternoon, sir, and congratulations for a good set of numbers. Sir, my first question is that given that our utilization in Chennai is now closer to 60%, what is the timeline and capex for the second phase of expansion? If you can elaborate on that.
Yeah, so Bhargav, we have already decided to invest in the balance capex, which is maximum 20 to 25 crores, which will be sufficient to bring the modular machines to increase the capacity to 60,000 tons. And we are placing all the orders in a phased manner to reach us in next 1 year time. So some of it will be available for beginning of the next first quarter of the year, and some will be available for second and third quarter. So because we have a aggressive sales plan from Chennai also, we want to not limit it because of the capacity. Okay. And it is a small investment which is required. So we have decided to go ahead with this.
Secondly, sir, given that from Chennai we are closer to the customer, the location, as well as in terms of raw material sourcing also, we are now closer. Is it fair to say that the freight savings, once the Chennai plant operates at full-fledged, could be about 1.5 to 2.5% both inward and outward as a percentage of revenue?
Yes, but we are not committing that as an improvement in bottom line entirely. Some of it will have to be passed on because of competitive market. Okay, but definitely you can see the glimpses of the right decision we took to be in Chennai. But Chennai on a monthly basis have become profitable, and going onward, this is to improve further.
And sir, in terms of Thailand, given that it's operating at almost 90% utilization and we are making inroads into premium customers as well, any plans to increase capacity there, or we'll use the Chennai facility to target those customers?
So when we say Thailand is 91% utilized, we are doing some debottlenecking, making some little more investment, doing some more work to increase the capacity by another 10%, which will be possible in the same location. Beyond that, we don't have the space there. Okay. So the next move will be moving from low price customer to better price customers. That will be the next year when Yashovardhan gets major approvals in multinational counters. The volumes to Chinese companies will reduce and volumes to those multinationals will increase. So that will benefit the bottom line of the company. So for now, this is the plan, and there is no possibility of increasing capacity further in that location.
Understood. And lastly, sir, in the presentation, you mentioned that despite a significant improvement in Thailand in terms of pricing, you expect this to sustain or maybe in a band of about 10% here and there. So that confidence comes from the fact that you are seeing good visibility from your premium customers. Is that the reason why you are sort of confident on this realization in Thailand sustaining more or less?
Yashovardhan or Pranay, you should answer this.
Yeah, so, like I mentioned, because now good amount of volumes have started going, and the negotiations with premium customers is always annual. So we have a much better visibility with these counters, and the discussion is always for the entire year's business, which we have had for 2025, and now we are in the process to do it for 26. So the discussions are quite encouraging, and we are confident that these volumes will increase and will sustain.
Okay, understand. One clarification on this, that if there is a bilateral trade agreement which happens in the US maybe in the future, will that also include our category, or our category is sort of excluded as of now?
Bilateral trade
it is excluded.
India, or you mean Thailand?
Sorry, sir, I didn't understand.
No, Bhargav, this product is excluded. This falls under Section 232. Okay. So there is no adverse impact of reciprocal duty. Okay. Whatever duty is there across the board for all the countries is there, and it is little higher on China. So as of today, we don't see any change in the duty structure because of the trade agreements with India or any other country.
तो सर ये 25% जो है वो भी अगर 20% हो जाता है तो it applies to us also, meaning the penal tariff of 25%.
25 नहीं है, 50 हो गया वो. Okay, but that is across the board for all the countries.
Okay, great. Thank you very much and all the very best.
Yeah. Hello.
The next question is from the line of Ritesh Shah from Investec. Please go ahead, sir.
Yeah, hi, sir. Thanks for the opportunity. Sir, my question is, with a 5-year view, how should we look at the company? You indicated that we will go ahead with Chennai Phase 2. I think, so that is one. But beyond that, how should we look at the company, sir?
Yeah, it is difficult to talk 5 years view in this volatile market. 5 साल में तो धंधे बंद हो जाते हैं, नए चालू हो जाते हैं, यूनिकॉर्न्स आ जाती है. But I can tell you 3 years view, which is very, we are very confident of that Rajratan will be doing a business of around 190 or 180,000 tons with a top line of close to 2,000 tons. This plan is intact. Okay, beyond that, maybe we walk little further and we'll see some visibility. Yeah.
Okay. And my second question related to this one, when we say Chennai phase 2 expansion, what will be the process in securing approvals, basically stabilization of the plant? Will it be as easy as the first one, or is it like we have done all the hard work, phase 2 expansion won't have any of those hiccups?
No, those hiccups won't be there if we are expanding in the same location. Okay, so we won't have to go for a new approval. But if we see the market growing that fast, we see the customers' demand, which can absorb doubling the capacity there. We are ready to do that with a very low cost investment. But as of today, I don't see that happening in maybe 3 years' time. So 3 years are too long to, predict that.
Okay, that's helpful. And sir, my second question was on Thailand operations. I would presume there would be some benefit of forex in the reported rupees per ton number, the implied number that we see for Thai operations or Concall minus standalone. Sir, how should we understand the forex impact over here? Are there any tailwinds, or basically if you look at Thai baht, it moved both ways during the quarter. And if there are exports out of Thailand, probably in dollar terms, we would have some gains probably over there. So net, sir, if you could help us understand how to look at those numbers.
Pranay, would you answer this? Or broadly, we are not doing any hedging as of today because we do import from China in dollars and we export out of Thailand in dollars, and there is a natural hedge available. Whatever foreign currency impact you see of valuation is because of our investment in Thailand, and that relationship is changing. But Pranay, can you say more on this, or Hitesh?
Sir, as part from Thailand, I agree with you, and this is the only practice which we are following. There is a natural hedging on receivables and payables. But we do monitor if there is something changing related to forex. We are sometimes taking action, and we are hedging ourselves also if it is really necessary.
Yeah. So, Ritesh, very difficult to give projections on foreign currency gains or losses. Yeah.
Done, sir. Perfect, sir. Thank you so much for the answers.
But Ritesh,
Yes.
Yeah, sorry. So the improvement in realization that you see is also because, there's some downward trend on the raw material cost. But, we are not looking at it as reduction in raw material cost. The idea is, or the actual scenario is that we were able to improve our realization because the proportion of sales to premium customers increased. So that's also one of the major reasons for the realization improving in Thailand.
Sure. Sir, I'll just take a third question. Sir, how should we look at the timelines for phase 2 Chennai expansion and the ramp up of phase 2 at Chennai?
I already told you, we are ordering all the required equipments, and that should be available beginning of the first quarter of next financial year and complete in the second quarter. So next year plans for Chennai are big, so we need to have the capacity in place.
Okay, sir. Good. Thank you, sir. Thank you so much. Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, sir, and thank you firstly for the opportunity. Sir, can you please the tonnage from Chennai for Q1 and Q2?
Hitesh, will you answer this? You have the numbers.
Hello?
Yes, sir.
Yeah.
For Q2, sales tonnage 4768 metric ton.
4768 is for Q2.
Yeah, and Q1 725. And Q1 2485.
2485. Okay. So when we are okay. So where we are when we comparing Q1 versus Q2, so there is an incremental 3855 metric ton. So the entire contribution is from the Chennai unit only. Whatever improved,
and you will see more of it is coming.
Okay, sir. Sir, आपने एक्सपोर्ट के लिए क्या नंबर दिया था चेन्नई से for the entire year? I missed that tonnage.
So around 6,000-7,000 tons for this year.
6 to 7,000 tons. And sir, आपने अभी एक figure mention किया था tonnage of 1,80,000 ton, that the 3-year vision and 2,000 crore top line. This is what you mentioned, sir. Just reply to
close to that, yes, yeah.
Okay. And sir,
1,80,000 tons of bead wire and other products maybe 15,000-20,000 tons. That makes it close to 200,000 tons. And because we are also investing in a wire rope facility, and that will also add 10,000 tons. So, abhi dekhte hain.
Okay, I was coming to the wire rope part only, sir. इसमें अभी क्या progress है and how are we progressing? What the
so it will take another 6 months to complete. We are building up a new building. Machines are already at site, stored in a godown, but we had to make a new building for accommodating all that layout and machines. And we will start production in the first quarter of next financial year.
Okay, sir. So when we look at our cash flow, for the first half under the plant, machinery and property, we have invested around close to 31 crore. So can you quantify where this money has been spent? 31 crore, 30 crore, 72 lakhs.
Hitesh?
29 crore in wire rope plant at Pithampur.
And some in the balancing equipment in Chennai maybe.
And so for Pithampur, is it the efficiency one or can you quantify where this money has gone?
No, it's for a new project. It is for the new project.
Okay, sir. Can you elaborate slightly more? I'm off record. What are we setting up and what are we doing here?
No, we have talked about it in the past also. We are doing a pilot project of wire rope business, which is 10,000 tons per annum capacity. If we are successful in this business, then maybe after 2-3 years, we really want to invest in a bigger capacity. Yeah. So as of today, because we had the space available, we had the capability, people were available, we decided to put up this in the mother factory at Pithampur. So for longer run and for global market, Indore may not be the right location, but all those decisions will take maybe 2 years from now.
Okay. So that entire 29 crore is attributed towards the wire rope facility. That is what
yes.
You are done.
Yeah. And more of investment is required, which will be in the coming months.
Okay, sir. And what will be the total capex we have envisaged for this project?
70 crores for this project.
And this is only the plant and machinery part, since land is there co-shared by the mother.
No. Total investment is around 70 crores, out of which plant and machinery majority of has already come.
Okay, so now we need to invest in land.
No, land is already there. We had our company land. So new building, other infrastructure, power, electricals, material handling, all this will be done now.
Okay. So when we look at the realization part, that is trending lower only. So if you could just give some colors for the domestic entity or on a consolidated levels also. So just a color on the market and what are we anticipating in terms of realizations going ahead?
Yeah, so as I told you, we are working in a competitive market. You see realization lower because the raw material prices have also come down. Okay,
right.
So there is a huge correction. Prices of steel products remain softer. So the price of bead wire, But we are happy with this realization, and we have enough, plans to improve on our cost to continue generating, satisfactory EBITDA number and profitability. Yeah.
Correct, sir. And last point is on the cash. Hello. Hello. Sir, I'm there, sir?
Yes.
Yes, sir.
Yeah,
You
yeah.
can
Sir,
continue.
yeah. Sir, on the in the cash flow, sir, we see that the net of income tax paid for the first half on a standalone basis is lower than what we paid for the last year first half. So that does that include some regarding the Chennai operation unabsorbed?
And actually, Chennai operation depreciation will save us on income tax. Yeah. Because this year we'll claim full depreciation on Chennai operation. So the income tax liability will reduce. Yeah.
Will reduce. But going ahead, we will be seeing improvement in the tonnages from the Chennai unit. This is what the roadmap for H2 looks like.
Yeah, sure. Yes, you are right.
And sir, thank you for this very detailed and crisp investor presentation that answers and gives the information in the much needed way. So please continue with the same, sir, and all the best to the team, sir. Thank you.
Thank you. The next question is from the line of Preet from InCred AMC. Please go ahead.
Thank you for the opportunity, sir. Congratulations on the stellar performance. Sir, I would like to know about the realization which we get in India market as well as export market. What would be the difference? We have been continuously telling that we will be supplying to premium customers. Just wanted to know about the realization difference which we get. And also if we could talk something about EBITDA margin which we make in India and what kind of EBITDA margin we make while we export the same product.
So there is a big price differential in the market. Okay, multinational companies we get better price. Some in India also there are cycle market where the realization is very low. So the price differential in our product is quite of ranges between plus minus 8-10%. Okay, so very difficult to tell you. What you see in the profit and loss account or balance sheet is a total number divided by tonnage, okay, which is average price, which may be a misleading figure. In the international market, again the same scenario. If we are supplying to a Chinese customer, prices are very low. If we are supplying to a European or a North American customer, prices are better. So what you see here is a total average price. Yeah, very difficult. On EBITDA, we are confident of continuing with the same margin or some improvement from here because there is a lot of improvement in the cost possible with increased tonnage. So our costs are likely to come down substantially in coming months. Part of that will have to be passed on to customer, but there is a likelihood of improvement in the EBITDA margin also.
Got it, sir. Sir, I can understand that it would be difficult to mention about the realization exactly, but if you could just tell the ballpark difference between Chinese customer, which are the lowest realization, and the premium customer, which we have started like in Europe and North America, what would be the difference of the realization between them, lowest and the
$800 से लेके 1000 और $1050 तक.
It is 25-30% kind of difference.
Yeah.
And also on the thing that now I've heard about the policy of anti-involution which has been played in China. So this is the reason why they are not dumping now in Thailand, or is there any other reason why we are getting better realization as well as volume are increasing in Thailand plant?
No, it is only because of increase in volume. Chinese have not stopped dumping. They are as competitive as they were. Okay. But fortunately, our cost structure is also very competitive, and we are able to compete with Chinese suppliers in Chinese tire companies. Okay, so we are, we are making little profit, but we are able to supply them. And increasing volume in our business gives you an overall improvement in the cost. So we have decided not to reduce the production, but continue with full production and keep supplying wherever we have little contribution.
Got it. And we do one more business apart from bead wire, some wire rope, or I don't remember the exact name. What would be the volume for this quarter, and what kind of volume we are expecting for this year from that particular segment?
वो उसका सेम 12 से 15,000 टन साल का रहने वाला है. हम उसमें कुछ ज्यादा नया इन्वेस्टमेंट भी नहीं कर रहे हैं, and that will be maintained at that level. So we have some spare capacity which is profitably being used, but उस पे बहुत फोकस नहीं है और उसमें बहुत ज्यादा स्कोप भी नहीं है आने वाले सालों में.
And have we seen any margin improvement in that particular segment, or that are in the line with 6-7% which we used to do earlier?
It is same. But it helps us reduce the overall fixed cost.
Yeah, understand. One last question on the capex upfront. We have told that we are making into that wire rope business, and we would be doing around 40-50 crores of more capex in coming half. So total capex, if I'm not wrong, you have guided in some of the conference that it will be 100 crores for FY26. If you can guide on similar basis, what are you expecting on FY27 basis? What would be the capex total?
FY27, we don't see much happening except 15-20 crores, which will be balancing equipment in Chennai, and maybe some balancing equipment for wire rope business in Indore location, and some debottlenecking in Thailand. So you can call it maintenance capex, which will happen, but not more than 20-25 crore max. अभी हमने वर्कआउट नहीं किया है, but this is the मोटा मोटी यही रहने वाला है.
Got it. Sir, one last question on gross margin side. For this quarter, we have seen a very much improvement in gross margin due to Thailand plant. So what would, from the 3 years point of view, which we have guided like 180 tons of bead wire and 2,000 crores with improving EBITDA margin, what we have done in this quarter, what kind of gross margin can we think from a year point of view that would be sustainable? Would it be the current level of 42%, or we see around 38-40%, which we have been doing in last 3 quarters?
38-40%, you never did something wrong in your data. So again, this percentage will change with the change in the price. Okay, so I think for now you can assume the same EBITDA level and do your calculation, or we can get on to. You can get this information later on.
Got it, sir.
Yeah.
Thank you, sir.
Thank you. The next question is from the line of Vinay Thakur from Plus 91 AMC. Please go ahead.
Hi, good evening, sir. I have a couple of questions. So could you give me guidance regarding the revenue for next 2 years?
Sorry, come again.
I would like to know the guidance for next 2 years, sir. What revenue are you expecting this year in FY26?
So we have plans to grow in 15 to 20% volume growth in next year also. Like 15% this year, 15 to 20% next year, depending on the price, similar top line growth.
So similar top line growth, 15 to 20% from last year, FY25.
Yeah.
Okay. And sir, what would be the realization consolidated for us this year?
Sorry, I already answered this question.
Oh, sorry, sir. I joined late, so that's why I missed it. I am really sorry.
What is your question?
So what was our consolidated realization on a top line basis for per ton?
So in India, it is around 88,000 to 90,000 rupees per ton, and in Thailand it is around 83,000 rupees per ton in rupee terms. Yes.
Okay. And sir, what EBITDA margin are we hoping to? Are we going to bounce back to our old margins around 17%, or it's going to stay at 14 for this year as well?
No, it will range between 13 to 15 because anything beyond 15 requires a tailwind, and we cannot predict a tailwind. Okay.
Okay. That's about it, sir. Thank you so much.
Thank you, Preet. Yeah.
Thank you. The next question comes from the line of Rahul Kothari, an individual investor. Please go ahead.
Hi, good evening, sir. My question to Mr. Rajratan. So do we see any export opportunity in markets other than US, Europe, or Southeast Asia, like Middle East or Latin America?
So when we talk of America broadly, it also covers Latin America. So we are looking at a few counters there. Other than that, Middle East does not have too much of tire production, and countries like Iran have it, but there are some sanctions on those countries. One potential that we are evaluating is increasing our sales to, or probably look at counters in Japan. But it's too early to comment, or it's too early to predict that market right now. But that's what we are looking at for the next 2 years of growth.
Okay, thanks. Thank you.
Thank you. The next question is from the line of Rishabh Gang from Sacheti Family Office. Please go ahead.
Thank you for the opportunity. So first question was on the wire rope. We had talked about a 50 CR kind of capex for that, right? You mentioned 70 CR today.
No, total 70 crore.
Okay, fine. Next
I
question
think we have been saying that only.
Okay, my mistake, sir. Then sorry. On the competition front, how are we seeing the competition dynamics in Thailand? I read somewhere that there's this company called as Xingda, XINGDA. They are claiming to have
it's a Chinese company.
Yeah, they claim to have 80,000 tons bid by capacity in Thailand. So, have they reached a commercialization stage? Because I read it somewhere on their website. Second was, on our customer mix, we say that, we will sell more to premium customers such as MNCs in Thailand. So how hard it is to get the approval for these MNCs, such that, what is the moat that we have against Chinese players also getting access to this premium customers?
Yashwardhan?
Yeah, so Xingda is there in Thailand since last probably 8 years, but they only manufacture steel cord. They don't make bead wire. A few years back, I think around pandemic, they had announced to put up an investment in Thailand, but it never took off. That's what we know, but if there's any information, probably you can share with us. So that's about Xingda. Regarding MNC, the approval cycle is long, definitely. What gives us as an advantage is we are a local supplier or local producer in Thailand. So our service levels and our discussions with the customers are all based on providing them an added advantage of being a local producer. Chinese suppliers are already present in these companies. So it's not that Chinese are not supplying to them, but probably definitely Rajratan has an edge because we are there in Thailand.
Got it, sir. Also, sometime back you had mentioned that Chinese government have stopped the export rebate. So there's no such export incentive by Chinese government to bead wire manufacturers currently also, right?
Yeah, it's not there. It's still there on steel cord, but it's not there on bead wire anymore.
On the BIS regulation, right? I understand that this BIS regulation don't easily go to players in China, or maybe last time you mentioned Rajratan Thai wire. So is it still as hard as earlier to get this BIS regulations?
Yeah, it's still hard. We are done with our inspection, but still we've not received the license. So probably getting BIS approval for bead wire still seems to be a struggle.
So that is actually beneficial to us when we compare to China and India.
Yes.
My last question is on the working capital, right? So how do we see our working capital days panning out? Considering both that we sell more from Chennai as well as we increase our exports because those have higher inventory days and receivable days.
Yeah, so it is because of our higher sales to global market. Okay. So say, for example, if we are shipping to a customer in US, it takes about 45 to 60 days transit time, and he pays after 60 days. So the real, the credit cycle goes up to 120 days, in some cases 150 days also. So you have seen historically we were operating at 70 days working capital cycle, which has gone up to 90 days. And it is only because of that. There is no change in the customer profile or credit days in local Thailand or in India. It is purely a factor of higher export to long distance customers. Yeah.
Got it. So this is very helpful. If you can quantify on the time it actually takes for the approvals to come, right, for a normal tire manufacturer and let's say a very premium MNC customer, because we keep on reading about this, but I never read the number of months. So if you can tell about that, especially experience.
If everything goes, multinational companies, anything from 2 to 5 years, okay, and with local big companies like MRF, who is sitting close to you, anything from 1 year to 3 years. Yeah.
That is a significant.
But 1 year is the minimum time. 1 year is minimum time for any good customer.
Thank you so much, sir. This is very helpful. That's it from my side. Best of luck.
Thank you, Rishabh. Thank you.
Thank you. The next question is from the line of Nikhil Joseph, an individual investor. Please go ahead.
Hi, sir. Good evening. Thank you for the opportunity. So I just wanted to ask you, in terms of the Thai plant, as you just mentioned on this call, since we are very competitive there despite Chinese competition. So what is it that is going right there? And my question is, currently, although India doesn't see a lot of import from China, but suppose that changes in a significant manner after a few years, will the Indian plants also be as competitive, or what are the factors actually differentiating?
So you asked two questions. So the good thing in Thailand business is that we are exporting to better customers. We are selling bigger quantity to multinational companies where prices are better. And number three, our volumes have grown in Thailand. So any volume growth in business gives you a better, better cost of product and better gross margin also. So this is about Thailand. If hypothetical question, if China enters India, if the quality control order is done away with, if government freely allows Chinese, so they will also allow Chinese wire rods to be supplied to us. Okay. And if we get Chinese wire rod, our conversion cost will be as competitive as any Chinese player. Okay. So I think with bigger capacities like 60,000 tons in one location will be equally competitive from both our locations, which are strategically closer to the consumer.
Understood, sir. Thanks for that. And just one last thing. You had mentioned that the overall industry, you named a few competitors also putting up capacity. So what is the total industry capacity right now, and what is it that is coming up, say, in the next 1 or 2 years, and how do you expect it to impact, say, margins or any other operating metrics? Thank you.
No, so as I told you, the total Indian market to our calculation is around 160,000 tons to 170,000 tons per annum. and installed capacity is much higher. But, that is on paper. Viable capacity is a capacity which is approved by customer. Okay. So there is a difference in the installed capacity and viable capacity. So that is how it is. Companies have invested in three lines, but they are lying idle. So this is about it. Yeah.
Got it, sir. So if I understand, probably these guys are not getting approval, which is why they are not producing. Do we see them getting approval, say, down the line with a 2-3 year lag to us, or that's not really how it works?
No, if they sustain these losses for 2-3 years, yes, they will learn, they will improve the product quality, they'll get the approval also. Yeah. But depending on I keep saying that smaller capacities are not viable because your cost of production goes very high, and bigger capacities are not sellable because there is no customer without approval.
Got it, sir. Yeah, that's very helpful, sir. Thank you and all the best.
Thank you. The next question is from the line of Radha. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations for significant improvement in performance. Sir, wanted to know what is the total employee headcount for Chennai facility and also for Indore. And if Chennai phase 2 comes on stream, how many more employees do you plan to add?
Yashovardhan.
Sorry, you were asking about the Chennai employees, right? When we increase capacity?
Chennai and Indore. Yeah, Chennai and Indore currently. Yeah. And for phase 2 Chennai, how many more are you planning to add?
The sales team in Chennai, if I have heard correctly.
No. I'll answer this. In Indore, we have around 450 people. And in Chennai, currently we have 180 people working. And we have approval to go up to, like we as management have given an approval to go up to 210 people with full capacity of 60,000 tons installed.
Okay, understood, sir. Sir, if the Chennai plant is ramped up further over the consequent quarters, so the Indore utilizations will gradually come down. So in the interim, because of this, just wanted to understand what is the total fixed cost per metric ton in Indore versus Chennai.
Fixed cost per month is, Hitesh, you will have number. But right now, per metric ton is 8,000 rupees per metric ton in Indore, and it is much higher in in Chennai because the volumes are very low. But I don't see possibility of Indore volume coming down, okay? Because we will be exporting from here, and we also have customers whom we were not supplying because we were short of capacity.
So, could you tell it in terms of fixed cost per month in rupees?
Hitesh, Indore fixed cost
in
per
Indore,
month.
In Indore, fixed cost per month is 2 crore 27 lakh per month.
Okay, and Chennai?
No, 2 crore 27, 4 crore 55 lakh per month.
In Indore
okay,
and
Chennai?
Chennai, hold on.
Radha ma'am, are you done with your questions?
1 minute, Chennai cost is given.
All right.
In Chennai, 2 crore 33 lakh per month.
Okay, sir. And what is the tax rate in Chennai, sir?
No, there is no tax, separate tax. It is the results are with the same company. It is the unit number 2.
So because of the PLI is a total tax benefit. So it will be 26% only on this.
It will be on the balance sheet. Tax will be on the total consolidated number, the merged number of Chennai and Indore operation. So there is no separate tax on Chennai.
Okay, sir. Okay. Thank you, and all the best.
Radha, you can connect with Hitesh if you want more numbers. Yeah, please.
Okay, sir. Thank you so much, and all the best to you.
Yeah, thank you. Hello?
Yes, sir. The next question is from the line of Preet from Incred AMC. Please go ahead.
Yeah.
Thanks for giving me opportunity once again. There are only two questions since I need some clarity. You have mentioned that from 3-year point of view, we are planning for around 180 to 2,000 tons and our top line would
200,000.
200,000 tons and our top line would be in the range of 2,000 crores. So are we expecting the realization to increase from 88,000, currently 88 to 90,000 to go to 1 lakh rupees?
No, I am building in some inflation, okay, but, that is why I am talking of a range from anything from 18,000 to 2,000 crores because the new wire rope business which we are doing, the prices are around 150,000 rupees a ton, okay. So different products will get you different realization. So it's a ballpark number. Yeah.
Got it. And one more thing. On
I think it also will have an effect of, raw material prices that day. So probably 180,000 tons of sales is what is a good number to look at.
Yeah, got it, sir. And one more thing on export side. Correct me if I'm wrong. I have heard that you have mentioned that for this year we are planning 6,000 tons of export, and for next year we are planning around 40,000 tons of export.
No. 6,000 from one location in India. And overall global export, including Thailand and India, is 40,000 tons.
So this year it will be. So let me clarify. This year we are expecting it to be about 20,000 tons of export, and next year's plan is in the range of 35 to 40,000 tons.
Okay. Got it.
6,000 tons was only from Chennai. Approximately 6,000 would be from Indore, and Thailand would be doing about 12 to 13,000 tons.
Okay. And on employee expense side, now as we mentioned that we have around 180 employees in Chennai, so that this is the reason why we are seeing increase in employee expense for last 1 year. And are we and will this be numbers stabilized going forward?
Yeah, these numbers are stabilized only, but there will be a bigger denominator in terms of tonnage. So per ton cost will substantially come down when we increase the production.
Got it. And for the fixed cost, which we have mentioned, 4.5 crores per month for Indore and 2.3 crores per month for Chennai, does this include employee expense as well?
Yes, it does include.
Okay. Thank you so much.
And interest, depreciation, other overheads also. Yes.
Okay. Got it.
Thank you. The next question.
I think it is 5:10.
Yes, sir.
You will take it to how much more time do we have?
Just a second, sir.
Question,
Shailesh?
Yes,
sir,
Mr. Shailesh.
One last question.
Yeah.
The last question comes from the line of Rishabh Gang from Sacheti Family Office. Please go ahead.
Yeah, thank you for the opportunity, sir. So, what is the current trend that you are seeing on the competition front from your Indian peers, like Tata Steel, Bansal and Aarti? Also, you spoke about, unviable players possibly exiting due to excess capacity. So what is the kind of capacity utilization which is needed in the industry, below which players generally make EBITDA margin losses? If you can tell about that, sir.
Yeah, very difficult to comment about competition, but our experience is that at current price level, 60, 65%, unless you do 60-65% utilization, you don't break even. Okay? So we are seeing some of the competition only using 15% capacity. So I'm assuming that they'll be making losses. So it is all about how much loss absorbing capacity you have. Okay, which will decide.
Okay. On the wire rope front, so we mentioned that, it is possible to achieve a 17-18% margin, let's say, when the plant comes up. So what is the right to win in that particular segment? And, is 17-18% the best kind of margins? Like, what is the path to getting to that? How do we think about it? The strategy-based question. Yeah.
Yeah. So path is simple. Make full production, get approval for the product, make good quality product, sell it to global customers. And this is what the people in the wire industry who are doing that right, this is the number they are able to achieve. So our projection is based on the assumption that we'll be able to do the right quality volumes to achieve the similar profitability what our competitors are doing.
So the approval periods are similar as bid wire?
But no. Much lower. It's not as complicated. It's not an auto product. It's an engineering product. Okay. So not such a long time.
So 4-6 months.
And as I told you in earlier conversation, that this is a pilot project. So pilot project is more for learning. Okay.
Correct.
But if we do it well, the opportunities are very big. US alone imports around 15,000 tons of wire rope every month.
Okay. That's a very big opportunity. Correct.
Yeah.
All right. Thank you so much, sir. Really appreciate it.
Thank you, Rishabh. Yeah.
Thank you. This was the last question. Ladies and gentlemen, I now hand the conference over to Shailesh Raja from B&K Securities. Over to you, sir.
Thank you all for attending this session. Sir, would you like to make any closing comment? Sunil, sir?
So I'll end the call on a positive note that, you have seen improved performance, I think, which is beginning of U-turn, and the road ahead looks very promising to us. So keep watching Rajratan, and thank you for your interest. And we'll, from management side, we'll keep doing our hard work and with full value for our investors. Thank you so much.
Thank you, sir. Yeah.
Thank you. On behalf of Rajratan Global Wires Limited Q2FY, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.